Good morning, everyone, and welcome to the European Crossover webinar. And as you can see, we just got some data coming in with the Spanish CPI coming in right as what they were expected. Reuters poll, you can see here, was expecting negative 1/10, came in right in line with that 1/10 year over year. Up 0.1, up 0.8 tenths, came in at 0.7, pretty much in line. Previously, we had French data come in, came in right in line, actually, on final month to month and year to year, year over year. German wholesale prices down 9/10, not a surprise there. With CPI month over month coming in right in line, as well as year over year. As we'll roll into the rest of the day at 8 a.m. Eastern, and once again, I'm on Central Time, so 7 o'clock Central for me. It's going to be 8 a.m. Eastern. Mexican industrial orders, and then followed by import-export prices here in the States at 8:30 Eastern, and then we do have preliminary University of Michigan at 10 a.m. Eastern. We are seeing equities at the high, so we'll go on and move in there quickly. Just a quick review, or recap, I guess we call it that. Or rather not even a recap, just an overview for right now. We'll go into that later on today. You can see here in the SPOOs, we're pressing higher. I shared this chart in the towards the end of this session. I actually shared it several times, but to give us an idea where we were, and I was noting here, we dipped as low as the 88%. We actually pushed even further than that. I had support here in this band here, 2466 to 2466, but we did press higher in after hours, which isn't a surprise once again, because we were expecting even more selling. There was a lot of selling on the close, and that's not a surprise that it even pushed even further with additional selling. But you can see here that real good area here. Let me just go on, and this is off of the same level, so let's go on. Let me clean it up a bit. So you can see we came here to the 88%. We even overshot that. But you can see here, we're really well overdone. I guess you came here as even to this low right here. Look at that, which is 2410. So we dipped just below that 2410. Bear with me. There you go. My thoughts were that today we could see the last of the selling. I thought, I guess maybe a lot of that. One guy yesterday, I think it was Ivan Decay, was noting on the close. He goes, it looks like mutual fund liquidation at the end, because there was so much selling out. I think it was $7 billion on the close that Top Step Trader put. He easily goes and posts how much. So I think it was $7 billion on the sell side. So we really pushed lower. And then, of course, we've just got some further follow selling. And you can see here, it's just been a steady climb. I did post this in the chat room. Bear with me. What's her name? Pelosi stated she was there. She had spoken with Mnuchin 5 times. It actually turned out to be 5 times yesterday, as they try to get something on this Corona package deal. And I put on there that that should provide us a bid, from which to go with. And but that turns out she was saying they're expecting to make an announcement today. So think, okay, well, that's going to take a little bit off of that shine. But you can see here we've seen decent little recovery. I did not stay up late in Asia. I mean, I poked around here a couple of times, but I just didn't feel, didn't want to, and I wasn't sure there was going to be that much of a big movement. But we have seen a good movement here. We've seen this thing come back. So we'll see how that plays out. Plus, we should be rolling into June. I mean, yesterday I thought we were going to see more, and there was still a lot here on the March. I guess we'll be rolling into June later. So I'll have to look at the June to see if, let me take a look here real quick. No, the volume is still, well, no, it's still more here in the March. So anyway, we'll be rolling into the June. But it's still enough here on the March. I was just looking here on another chart here. We'll go on and take a look at the NAS real quick. One of the things I'm doing while scalping that I found very, very helpful, which I've had the NAS up before, but for the last few days, the SPOOS has been reacting to the NAS. It's almost like the NAS is pulling the SPOOS by the nose ring, at least when you're seeing it on a very, very short-term chart. And the NAS is also going to come back. I guess you saw that on the other graph. And then, of course, well, here's the June here. Actually, had on the April gold. Let's see. There we go. Wow, we've really come off on the gold. I hadn't paid too much attention. Saw them come fading yesterday pretty good, but wow, that is a lot. But of course, what we've seen is it's been impacted by margin selling. It's the old story: you sell what you can sell, and people that had equity losses were having to incur margin calls to sell those things that they can sell, things that did have profits. And we saw this market come on quite a bit, and it stayed that way. It's obviously a lot of it is based on, also to a certain extent perception, because then people say, well, God, then it's not going to rally. So then they even sell it. And then obviously you hit the offers. And so we're at a point definitely yesterday where people just want to be in cash, and cash means literally cash. That's where you even saw we'll go back to the screen where the S&Ps are at. Go there. So look at the 10-year, and you think, well, God, if equities are selling off, shouldn't they be rushing into the 10-year, which they have been? I mean, this is on a 2-hour chart. But the deal is like I said, when people want cash and think they are really like, truly they want cash. But also we saw here that there was a lot of, there were some funds that reported to have been using kind of hedging, so to speak, in a way where they're actually doing plays against the bonds and really got themselves in trouble. And I noticed yesterday I saw some talk that they think there were quite a few funds that, for lack of a better phrase, blew up yesterday. Not only blew up in equities, but blew up in some of these I'm trying to think of the right way to go and say it, but these bond plays where they're kind of hedging, kind of like offering to go on and well, they're trading bonds against either equity positions, bonds against high yield, debt positions, and got themselves into trouble. So sometimes the situation like you see these, I guess you can call them anomaly plays, in the sense that this does, like you're looking at it and you're scratching your head thinking, what the hell's going on here? Equities are just completely collapsing. And yes, bonds have come, or in this case, 10-year notes. Look how far they've ran. Look at this, just from February 21st. Just, that's in 10 full points. But you're thinking, should they at least be holding their own, if not even making higher highs? But you're seeing all these cross currents of funds, and some funds that have blown up, and issues. Like I said yesterday on the close, $7 billion to sell. I mean, while you saw continued follow through yesterday, and also a lot of, I'm seeing even on those that were advocates, griping about the handling of the administration. And that's not me talking politics. It's just that I've even seen that come across, and so a lot of people upset. And certainly that led to what we saw, because right from the get-go of Trump's speech, we saw the market sell off in that evening, not last time, but the prior evening. And then we just saw that continue to go. So people that you wouldn't even expect, I even saw on CNBC, really making their thoughts known. So that's where we are now. Let's go on. We'll quickly take a look at crude oil, which was actually making a high, but we pared back just a hair. Okay, you can see it's here. We've made a nice little run back here. Here's crude in the 30-minute. Let's go move this a little bit closer. 2 hour. There's daily. Look at this gap, unbelievable. But you're seeing it trying to move towards this higher part of the week's range, not the high part, very high, which actually came out on would have been Wednesday. But we're, at least for the day, we're trying to make a move back up in here. There's some resistance you can see right there, and we're having some trouble. So we run the level, and you know me, I like to run across the bodies, because to me that's where the volume is. And you can see that's where we're having trouble at. Let's go on and get it back into FX, but that kind of gives us an overview of where we stand across these markets as best we can, because certainly we had huge moves and can't recap that in this shorter time, but at least it kind of gives us an idea of where we're at this moment. So we had seen the euro come under quite a bit of pressure. Now, actually, if you remember, we talked about the ECB story. We covered that a couple of days ago. I mean, if you were here in the webinar, I posted the story. I mean, look, I haven't traded the euro, so I'm not, putting a feather in my cap or anything like that. I posted the story, even talked about it or mentioned it to Stelios, was the whole idea. Let's go and move this back up here to the 2-hour chart. And there was a story from Reuters about the trouble the Italian banks are having, obviously due to the coronavirus, or certainly is exacerbated. They've always got problems. But the thought was that the ECB would have to come in and be basically, supporting, it would support this market. So when they had the ECB decision yesterday, Lagarde, she made a reference, I don't know if you want to call it a veiled reference, because like I said, things were happening so fast. I was listening on the Squawk, so this is just what I heard from the Squawk. But she was basically saying, I don't think she said it really directly, but people shouldn't consider the ECB basically is the first place you go to, the first place you can expect, essentially, for lack of a better phrase, to backstop. So immediately, because remember, into that ECB meeting, because of that story, that's where we saw the euro continue to sell off, and then continue on and on with selling off going into yesterday. Now, not at this point here, but if we got into yesterday, we were really on the defensive. People were scratching their head going like, why is the euro selling off? I don't know. I guess if you saw that Reuters story that I posted, we shared, we spoke about in the webinar, you'd know why. But what happened is that when she did make that comment, then we saw the euro snap back. Yesterday, we saw this make a run up in here, and I think it was 13.16 was going to be the 38%. It only made up to like 113, but then we turned around and sold it off, because I guess they figured, well, what the heck? They're still going to be impacted, with you saying that or not. The bevy of where all this is going is being impacted so much in Europe, and I guess they went with that, and of course, we really came undone. But anyway, that being said, we'll just go and hit the news real quick. So bear with me. So Australian and New Zealand dollars left broken in the global rush from risk. The Aussie and New Zealand dollars laid bloody at 11-year lows on Friday as panicked investors fled risk in all forms and dumped currencies with exposure to global trade or commodities. As the spread of the coronavirus disrupts travel worldwide and almost shuts down some countries, markets have increased priced in the inevitability of the global recession. I was watching last night. I was a town hall, 2-hour town hall on CNN for the coronavirus. It was actually broadcast around the world and through Facebook and blah, blah, blah. But I remember at the beginning of the part, they were talking to the guy from England. I can't think of his name, Quint or something like that. He kind of handles the business whenever they have concerns about the market and stuff like that. The last Kim, he's based in London. But he was talking about when Trump had that travel ban for the rest of Europe, with the exception of UK. And he was talking about, I think it was Norwegian Airlines. They were potentially looking to drop 50%. So once again, remember how we're talking about the euro sold off, is that initially when Lagarde made that, I don't know if you call it veiled reference, because I wasn't even listening to her. I was just only, had my hands full anyway with what's happening with equity, but I was listening in the background or had the squawk on the background, and I heard the guy mention it, and she made that veiled reference, for lack of a better phrase, about, hey, don't come to the ECB, for lack of a better phrase. Don't expect to come to the ECB if you want a handout, not actually a handout, but hey, I need some money. Well, don't come to us first. Which obviously they're not looking for money, but I'm just trying to lay it real plain, which is the issue with the Italian banks. So when that came out, then you can see here, you saw the euro take off and rally, because now the euro wasn't going to be impacted, supposedly, because she was saying, hey, don't come to us first, or don't expect us to be the first person you come to, in a veiled reference to Italian banks. So we rallied up in here. But then when you look at the overall impact, and certainly Europe is catching the brunt, with the exception of UK, it reminds me of what he was saying last night about the Norwegian Airlines. It's like they're looking to lay off 50% of their employees. So remember, at the end of the day, Europe is very, very exposed financially. But that's just one particular instance referencing to. So then that's why we end up seeing this euro come off way off. But anyway, getting back to this, rate cuts and liquidity injections by the central banks have failed to calm the mood, as have pledges of fiscal stimulus by the governments. That has led to a rush to ensure U.S. dollar funding is the world's most liquid currency with the deepest debt markets. That reminds me, Blake's been saying about this for a long, long time about, when the market sell-off initially, but everything has happened. It's happened like in hyperdrive. So you would have thought over a course of a market sell-off that may have lasted, let's say, 3 months, that they're selling the dollar, and then eventually they buy the dollar. Well, this is all sped up and happened so fast that they were selling the dollar at the end of last week, but we've fallen so fast that all of a sudden people started rushing back into the dollar. Like he said, when poop hits the fan, then all of a sudden that's where people want to be, which is in the dollar. And obviously we saw that because we saw the dollar push higher. But we'll get to that in the analysis. But anyway, the exit from risk assets as seen as an increase in demand for U.S. dollars and wild moves in currency, said Rodrigo Cottrell. We're certainly in the midst of a severe global downturn, and more drastic policy action would be expected. Risk and growth-sensitive currencies such as the AUD and the Kiwi have room to trade lower. The Aussie seemed to be heading there in a hurry, having shed 3.9% overnight in the largest one-day drop since 2010 or mid-2010. It was hanging on grimly at 62.95 with next major targets of thoughts of October, November 2008 at 60.75. The Kiwi was huddled at 61.33, having lost 2.8% overnight in the largest daily drop since 2015. The crash in equity markets, the local index, has shed 20% so far this week, utterly overshadowed by the Australian government's launch of a major stimulus package on Thursday. George Theranos, economist at UBS, fears the package will not be enough for Australia to avoid a contraction in economic activity in both the first and second quarters. As a result, he expects the RBA to cut rates another quarter point, and also they're looking for the RBA potentially to move into QE. But anyway, the RBA would initially use stronger forward guidance and target bond yields rather than a set dollar level of bond purchases. We have been very dovish, especially expecting Aussie yields to fall just to 0.5%. We now expect yields to stay even lower for longer. We're spending a little bit of extra time, which we did like last Friday. Obviously, we kind of want to encapsulate everything where we are now. And so I'm taking a little bit of some additional time to see where we stand here with equities, crude oil, reference gold, and then kind of talk about what we just had the ECB yesterday and just kind of give a lay of the land. So that's why we're spending a little bit more time than usual kind of covering some of these stories and where we're at, because it is Friday. We're wrapping up the week, and where the heck are we? Anyway, starting slides is growing coronavirus turmoil boosts the dollar. Starting tank to 5-month lows. Man, that was just unbelievable, the move that we saw here in the pound. Look at that. We broke 125 yesterday. I mean, it wasn't even that long. Remember, we were right here previously throughout the week, trading just right here at the buys pivot. If you remember, which is 29. Remember, we had just, I think it was Tuesday, we had just flipped it back to bearish because I go, well, we're back below this buys pivot. I mean, holy smokes, we were at 29, 80. We just broken below this pivot. And look at this. This is here on the 10th of March, okay? And we said, okay, let's flip the buys back to bearish. And look what we went to yesterday, sub 25. I mean, holy smokes. But anyway, that being said, sterling tanked to 5-month lows on Thursday, weighed down by worsening market turmoil after President Trump slapped restrictions on travel from Europe and European central bank stimulus measures fell short of expectations. The British currency received a short-lived boost on Wednesday when investors welcomed stimulus measures from the Bank of England and the British government, including an interest rate cut of billions of pounds of support for struggling firms. But the pound has since tumbled, first following the Trump's flight ban, and then again as investors scramble for dollars following the European Central Bank's decision to keep interest rates on hold. Which that is kind of a bit of an oxymoron, because then that would have been euro supportive. But once again, in a situation like Blake has said, when poop hits the fan, people just want to go into dollars. So actually, by them not keeping interest on hold, that would actually be bullish. And when actually the interest, they did mention that the euro did not rally. It did not rally on that. I saw the euro rally when the guy on the squawk said about making a veiled rep when Lagarde made that veiled references. Don't come to us. As soon as you need your money, for lack of a better phrase, don't expect to come to the ECB first. That's when we saw the euro take off. But anyway, the ECB announced caused the euro to fall and the dollar to rise as traders rushed to buy the most liquid currency, which tends to do well in market panics, which Blake has always said all the time. Sterling slid to 25.84, its weakest since October. The pound also fell to 89.12 pence per euro, the lowest level against a single currency since October. I think, of course, they, being the BOE and the UK government, tried to surprise us with a rate cut and a big package. I thought it was well coordinated, but I think people are still so scared they don't want to be long sterling. It still seem to be somewhat of a short shelling. I can't even speak this morning. Short sterling. Analysts at MUFG said to note an aggressive response to combat the coronavirus fallout by UK policymakers has failed after the pound's recent weakening trend. Well, I think people paint broad brushstrokes over things and say, oh, this is the reason why. And the ECB didn't cut rates. And it's not that, they try to make it too simple, but then in a way it is simple, which is what Blake's been saying. Look, folks, when poop hits the fan, that's where they want to go to, the dollar. So, of course, like I said, they got to make a reason like, oh, well, they were really disappointed with the way the market perceived what the BOE and the UK. No, it has nothing to do with, the ECB. They thought, no. It was just that, like I said, you see these markets come off that much, that huge catastrophic fall, then people want to be in dollars. It's, well, once again, they painted in a broad brushstroke, but really, like I said, but in some ways it is kind of simple, which is Blake has said all the time. Crap hits the fan, people just want to be in dollars. That's it. Prime Minister Boris Johnson was due to chair an emergency meeting shortly after which he expected to approve a meeting to delay phase of the response to the coronavirus, including more stringent control measures. I did see here that it says something about in the UK about them banning short selling, but it's for some Italian stocks is what I heard over the squawk. Dollar gain from safe haven scrambles as virus rattles market. The dollar stood tall on Friday as investors scrambled for the world's most liquid currency and deepening panic about the coronavirus, while the euro nursed losses after the European Central Bank disappointed by not cutting rates. Greenback held gains against most currencies after blowout and swap spreads, showing investors are facing a shortage of dollars as equity markets plunged on fears about the global economic impact. The ECB on Thursday unveiled a stimulus package that provides loans to the bank with rates as low as -3/4 and increased bond purchases. The Federal Reserve provided $1.5 trillion in short-term liquidity and changed the durations of treasuries it buys. The money market showed investors expect the Fed to have gone further to restore calm. Look, the S&Ps have come back off of those lows. They're still low. We were expecting the Fed to do something yesterday. They did. But the thing is I was referencing this, I thought the bulk of the selling was to come potentially tomorrow. Well, we saw that. Remember, I mentioned Top Step. He always likes to note what they're seeing in the close, and he noted yesterday $7 billion to sell on the close, which Ivan the K was saying, hey, to me that looks like he was saying, to me that looks like fund liquidation. So we finally saw it, and so now we can, although we saw more than follow through after the bell, but finally it looks like we might be starting to finally be able to put in a short-term bottom that we can maybe bounce off of. And then, of course, if Pelosi and Mnuchin can get this package together, this coronavirus package together, that will restore some common confidence, which was not the case when Trump spoke. Once again, not talking about politics, but I'm just saying that's the market voting. That's not even me talking. The stuff sold right from the get-go when he started talking, and then it kept on going through Asia and all the way into the U.S. Open when we opened limit, and then they reopened it down, and we opened down again further, and we started to come back up. So that's the market voting. And like I said, I generally don't watch that much CNBC, but a lot of people and folks and other people that I saw that are normally would be backers, really very, very critical of the administration's take on where they were and how they felt that it, invited a lot of, lack of confidence in the markets. That being said, the Federal Reserve did move, as I said, to provide that 1.5 trillion in short-term liquidity. The government in Italy, which has become Europe's hotspot for coronavirus infections, has effectively put the entire country on lockdown. Investors have also expressed disappointment with the government's response to rising infections in the United States, and traders warned there could be disruptions in the broad range of financial markets. Risk of used to benefit the yen, but now we're seeing a risk off is supporting the dollar, said Takuya Kanda, general manager at Gaitami. We are now in a panic mode because we don't know how far stocks will fall. And once again, this is key because I'm just going to reiterate it again. Like Blake said, look, forget all this other crap that supposedly Reuters and all these other ones, they like to label things and say, oh, this is the reason why this happened. No, this is the reason why that happened. It's the story of the day. And it's good to follow the news because that kind of gives us a flavor. But in this situation, everybody wants to paint broad brushstrokes. Look, it's like what Blake said. The guy's saying it right now. We're in a panic mode. In a panic mode, crap hits the fan. People want to be in dollars. It's that simple, although in other ways, journalists will paint broad brushstrokes to explain something, what happened that day. Oh, well, it rained today, so that's the reason why the market did this. No, it's just that. In a panic mode, people just want to be in the dollar. The euro traded at 12.02, following a 7.75% decline on Thursday in the wake of the ECB decision. Against the pound, the dollar rose to 25.41. Obviously, in this case, the cable falling that low, which followed its biggest one-day gain against the sterling since July 2016. ECB President Christine Lagarde also aggravated a market sell-off by saying it was not the central bank's job. That's what I'm talking about, sort of speaking. It was not the central bank's job to close the spread between the borrowing costs of various members, comments on which she later tried to roll back. Remember, I told you when she made that comment, that's when the euro rallied. Because like I said, I wasn't even listening to her, but I heard the guy on the Squawk say that, and I saw the thing, and I immediately thought of, because remember, that's the reason why the euro had been falling. Remember, the euro rallied, I think it was like on Tuesday, and we discussed that story, and then in the U.S. market, people were like, huh? What happened? Why is it falling? Like I said, we talked about that story here. I mean, I posted in the chat room. We talked at length about it. I referenced it to Stelios. And so it was falling. That was the reason why it was falling, because the story was, or the thought was, that the ECB is going to kind of be a backstop for these Italian banks. So then when she comes on and she says that, okay, by saying it's not the central bank's job to close the spreads, then we saw the euro rally on that. But then, like I said, then as they said, she tried to backtalk. I don't know. I guess she was catching a lot of criticism or whatever. But then we saw the market fall off. But then, like I said, it was kind of like a rollover effect then, because what we talked about is we said, hey, look, y'all are still, I mean, y'all being, Europe is still in a whole bunch of trouble. I referenced the anecdotal evidence about what that gentleman was saying, Clint, from the UK, saying, hey, look at the impact. And he was saying, I think he was saying just the travel, he was talking about the travel ban also, like from China, all the flight things, like $30 billion worth of flights to come over, whatever. But anyway, the one in Norwegian, what they're looking for to cut, they're looking to cut staff as much as 50%. So there was a great impact. And then when she tries to walk back the comments, then it just adds on to it. And so it's just like a rushing sense of water. And then everybody's trying to rush into dollars. So it just feeds on itself. But anyway, authorities are rushing to introduce travel bans, extra financial liquidity, monetary easing as the rapid spread of the virus across the world slams the brakes on the global economy. With the signs of financial stress emerging across different markets, the New York Federal Reserve said it would make the money available in 3 tranches of $500 billion each and would start purchasing of the broader range of U.S. Treasury securities. A lot of people are saying, oh, it failed. No, it did not fail. The point was it was going to slow down the selling. But they're still going to be selling. It slows down the amount of selling that's coming through. Once again, market on close orders were $7.2 billion to come into the close yesterday afternoon. So it didn't feel like panic. It just felt like the market was coming back down. It was kind of sitting there. And then, of course, we saw the follow through after the close. Bank of Japan, which also announced a policy decision next week, Thursday, after the Fed announced the unscheduled purchase of $200 billion in government debt on Friday. It also said it would inject an additional 1.5 trillion yen in the 2 week leading to the sign of concern that liquidity could dry up. And that's what the Fed was doing. I kind of made a reference to that myself, was they were just providing oil to make sure that the gears, the cogs can still move, that they don't seize up. It doesn't immediately stop the selling. It was different from what when the Fed cut interest rates, which they do it at a poor time. I thought they should have waited until the afternoon when they did that earlier. And then the market fell apart and everybody said, oh, this thing is, bunch of junk. Nothing has really come of this. But yesterday was different. It was to show, hey, guess what? We're putting enough oil so these cogs, the gears can keep on working. And it slowed down the selling. But the selling was there already as people that I feared were going to be dumping their 401ks. And I think now we can see a short-term bottom. Okay, so now let's go and move into the analysis. Bear with me. Trying to find there it is, my bias chart. So like on Fridays, we kind of try and do kind of like an overview of where things are at. The webinar will go long because look, we're already at the half hour mark. But I thought it was important to kind of like encapsulate where we are right now, kind of get an overview, and then we move into the analysis. So let's just go and jump into the analysis now. So the euro saw an initial rally when Lagarde appeared to signal the ECB may not be so quick to step in as support of an institution in a veiled reference to the Italian bank dilemma. The euro then succumbed to its inherent economic exposure to the coronavirus outbreak, selling off to a near 1050 before closing above 1185. Resistance will be 1231, which you can see it's kind of trapped in a tighter range now. Looks like we came up short of the 1220. Will be at 1231, was supported 1113. So let's go and bring that in. $12.31, $11.13. ECB retains the option for further rate cuts. That's what ECB Lanes just said. That's what's coming across on the squawk, or what I'm hearing in my ear. Hang on one second. Okay, now here. Okay. Yeah, ECB's Lane's making all kinds of things. ECB's Lane's decision about the short-term policy rate should be understood in the context of nature and expected durations of the shock. The clear and policymakers should be to negate or mitigate the impact of the shock. Anyway, ECB's Lane's just sent out a bunch of text out here. ECB's Lane says there can be temporary fluctuations in the distribution of purchases flows both across the asset classes and across countries in response to flight to safety. So anyway, he's working his jaw this morning. Anyway, let's go and move into the Aussie. I thought we had to reference that since obviously it's going to impact the euro. The Aussie broke to new, fresh multi-year lows amid the coronavirus impact, and the Russian to U.S. dollar initial support is 61.94. I saw that on the weekly chart, so that's what I'm referencing for that 61.94. Although we're even above 62.50 right now, followed by 60.71. Resistance will be 63.13, followed by 63.13. Well, it looks like followed by 63.50. So let's go with that from where we are right now. So we'll say 63.50. I think things are starting to settle. I mentioned this yesterday. I thought that we would get this low once we got past this 401k selling. I think we've kind of seen the worst of this, which I mentioned with what's his name, Top Step mentioning 7.2 billion to sell at the close. So what we're seeing today is for the lows. I think the most of the has been done. So when I look for support now, it's going to be right here in this open. 62.35. So the Kiwi fell apart on Thursday, averting the lows from Monday. The lows that can be tested on Friday will be 60.76. Looks like we may have already gotten to there. 92, okay. Can be 60.76. Followed by Monday's low of just 68 cents. Resistance will be 61.68. Looks like we almost made it there. Got 61.59. So it's going to be Deutsche Börse about a short selling ban. Anyway, until further notice, as was saying, at least that's what came across the squawk. Anyway, I've got that in my ear, so sometimes I'm trying to speak and do analysis at the same time. I only catch a part of that. But anyway, let me see, I've got 61.68. Yeah. I was also trying to look on the Squawk headlines to see if they already posted that story about that. But anyway, 61. Trying to do too many things at the same time. 61.68. BOJ, starting next week, they will provide ample liquidity using long maturities. BOJ. Bear with me. We'll continue outright additional JGB purchases, says the JGB. I mean, it says JGB, it says the BOJ. Anyway, I've got the Squawka mirrors. I'm trying to provide you this news as it's coming out, because certainly in this environment, we can see, you know, rapid movement with these currencies. Let's go move into the dollar CAD. So the dollar CAD closed above 39, stretching the breakout above 35 even, with a likely push above 140. The attracting resistance levels for today was going to be 140, was supported at 38.38. Conducted outright purchase, unscheduled outright purchases of JGBs. It says a BOJ. Conducted unscheduled outright purchases of JGBs, says a BOJ. We'll continue to do so as needed. Supported 38.38. This has been one heck of a move. Well, we have support today at 38.38. We've actually been as low as 38.23. Here's that support level, 38.38. We'll see what happens today, but that's where it is for right now. There's additional support here. Obviously, you can see it here, right here. And really this level, 37.92. So go to the peso. The dollar peso roared to near 23 even before pulling back to sub 22. As long as the equities are under immense pressure, the pair has the ability to take out 23 even. Initial resistance will be BOG says they'll increase the JGB purchases if necessary, as long as needed. Hard to keep up with all this stuff when we try to do the analysis. But anyway, as long as the equities are under immense pressure, the pair has the ability to take out 23. Initial resistance will be 22.17, followed by 22.38. We'll go with the 22.17. And on the downside, 21.60. Let's go to the dollar yen. Okay, the dollar yen swung back and forth in a near 300 pip range, closing with long-legged doji. Resistance level will be 527, followed by 560. Look, we've already gone above 6. I mean, with this run into the dollars. We've also seen the SPOOs come off from 25.90 down to 25.28. So we already shed 60 handles on this move right now. Bear with me. We had a double top right there when we were making that, and now we've come off quite a bit. So the resistance is going to be right here at 592. I really don't expect to see it come all apart again. See the volume right there? It's going to be 529, followed by 5. $505. The dollar index shot higher beyond 98 from a strong demand for dollars as shorts were forced out of positions. Resistance on Friday will be the weekly pivot of 97.89 with support at 96.89. And on the cross rates, we'll just quickly go through the resistance levels. Resistance right there, 90, 65, 62. Support comes in right there, 64.30. Resistance right there with this volume coming in. Actually looks like that was a high, 1888. For euro yen with support right here. See the volume coming in right there, which is going to be 1786. Okay, resistance going to be right there at 79.29. I don't see things changing around very much for Aussie, so 70, it's way too low. Golly, it's unbelievable how strong this has been. Unbelievable. 76.48. Right there is going to be 83.73 on the Euro Kiwi. Really, this is just about the levels. Same thing here, not expecting any big changes here. Support is going to be right there, keeping it tight, 81.41. With the Aussie yen, pretty clear as a bell right there. It's going to be resistance, 67.18. And support comes in right there, 65.82. Okay, resistance here on the dollar yen is going to come in at 34.24. And support right there with these touches here is going to be 32.31. Well, actually a little bit higher. Right there at 32.50. Resistance 201 on 40. And support just right below that. 1.98. I just call it 1.99. Let's just go down. Okay, and that wraps up the analysis. Just take a quick overview. Look, I got to run. We've already shed 60 handles already here, and the S&Ps. You can see that here. So we've already gone over this. We'll see what happens. We've already come quite a bit off of this, and we rallied up in here. You can see where we went to that key level, that 25.76. We just overshot it, and came up here to about 25.90, and you can see we've already shed 60 handles. So that's all we've got. Thanks for joining us here on the European Crossover webinar. We'll see you in the chat room.